Welcome to the GCV Weekly Briefing Podcast, where we break down the key financial and economic developments shaping the landscape for investors, businesses, and policymakers. In today's episode, we'll take a closer look at the recent rate decisions from both the US and the UK, examine the latest movements in UK house prices, and offer an early insight into the upcoming spring statement. All of these stories are contributing to a rapidly evolving economic environment, so let's dive in. To start, we'll look at the UK, where the Bank of England's Monetary Policy Committee met on March 19th. The committee voted 8-1 to keep interest rates at 4.25%. One member, however, advocated for a 0.25% reduction. In their February meeting, the committee highlighted significant progress in disinflation over the past 2 years, which allowed for gradual lowering of rates. However, inflation rose slightly to 3% in January, up from 2.5% in December, which exceeded expectations. With revised GDP growth forecasts and rising tax pressures, business leaders are expecting challenging economic conditions. As a result, the committee is adopting a more measured approach, balancing the risks of inflation with the need to support economic growth. The next meeting is scheduled for May 8th, and in the meantime, we'll be watching closely for economic updates. Shifting focus to the United States, the Federal Reserve has decided to hold its benchmark interest rate at 4.25 to 4.5%, where it's been since December. Despite this steady decision, the Fed has signaled the possibility of 2 rate cuts by the end of 2025, each likely to be 0.25 percentage points. This announcement was met with a positive market reaction, with the Dow Jones rising by over 400 points. Federal Reserve Chair Jerome Powell cautioned that interest rates could stay high if inflation doesn't move sustainably towards 2%, or if the labor market remains robust. As he put it, if the economy remains strong and inflation does not continue to move sustainably towards 2%, we can maintain policy restraints for longer. There's also an added complexity of rising tariffs and tax breaks from Trump's fiscal policies. The unfolding of these factors will play a key role in shaping the Fed's decision-making until their next meeting on May 7th. Turning back to the UK, house prices have seen a significant rise, with the average increase of £10,400 over the past year, bringing the average property price to £294,818. This surge has seemed to be driven by a growing demand for larger homes, as mortgage affordability improves thanks to easing interest rates. The first-time buyer market has been particularly active, with a 20% rise in activity this year, largely due to the stamp duty announcements encouraging first-time buyers to act before changes are implemented. Interestingly, flats made up 27% of these first-time purchases, although the breakdown varies widely by region, 71% for London, but only 4% for East Midlands. In the past 5 years, detached homes have seen the biggest rise in value, up nearly 30%. That's an increase of over £100,000. Buyers seem to be increasingly prioritising space, with trends like demand for gardens, parking spaces, and EV chargers pushing the market towards larger properties. Toby Leek from NAEA Property Mark summed it up well. Not only are buyers looking to take advantage of easing interest rates to secure bigger homes, but trends such as the surge in desire for outside space post-pandemic are pushing more buyers to pursue larger properties. Next, let's look at the political side of things. Chancellor Rachel Reeves seems to have ruled out tax hikes in the upcoming spring statement, opting instead for spending cuts to keep government borrowing in line with fiscal rules. This follows a $5 billion reduction in benefits, although it's not expected to have a significant impact on the overall budget, as the larger savings are already anticipated. The OBR, the Office for Budget Responsibility, is expected to report that government borrowing has exceeded its target due to weaker than expected economic growth. To restore fiscal headroom, Reeves will need to either announce further spending cuts or increase tax receipts over the next 5 years. With budgets for health and defence likely to grow, other government departments may face real-term reductions, and the Treasury is considering additional welfare cuts. These could include merging benefit schemes and potentially abolishing work capability assessments. Labour argues it inherited a £22 billion shortfall, forcing tough decisions to maintain economic stability. Senior economist Louise Murphy from Resolution Foundation said that too many of these measures appear to be rushed through to find short-term savings rather than securing long-term change. As we wrap up this week's briefing, it's clear to see that both the UK and US central banks are grappling with similar challenges, balancing domestic economic conditions while factoring in global tensions when making decisions on inflation and economic growth. With persistent inflation in both countries, policymakers have opted to hold interest rates steady for now. These decisions will continue to shape the economic landscape, and will be keeping a close eye on these developments. In the UK, house prices continue to rise, benefiting existing homeowners, but the widening income to house price ratio remains a growing concern. This is an important issue for the Bank of England to consider as they set interest rates, as it directly impacts mortgage affordability. Looking ahead to the spring statement, it seems likely that the government will prioritise spending cuts over tax hikes this time. We'll dive deeper into these developments next week, with a special focus on the spring statement and its potential implications. That's it for today's briefing. Thank you for listening, and I'll catch you next week.